Do you buy Mr. Rick's answer?
Well, I think all the healthcare companies, right, are going to say there's room for innovation, there's room for profits for everyone, but it's clear that what Amazon and JP Morgan and Berkshire Hathaway are trying to do is take money out of the middlemen in the healthcare system, and that's certainly a risk to a lot of those folks, again, in the central hub of the U.S. healthcare system.
You bummed you sold Amazon?
Oh, well, obviously, we sold a little bit early. We've seen the stock rise since we sold it, but we have reasons that go beyond this healthcare initiative, which, I think is good luck to them. I mean, it's a great aspirational goal for them to try and take care of costs out of the healthcare system. It's probably the biggest issue facing the U.S. economy, but it's also one that has driven many smart men to beat their head against the wall in the past. So, there's no leader there. There's three companies. I think a lot of the reaction on Wall Street was a little bit overstated. In terms of Amazon itself as an investment, where we began to get a little more cautious, we love Amazon as consumers and obviously as investors, but they have gotten involved now in the grocery business, which is a very difficult business to get involved in. And their cloud business, while they're the dominant player, it's extremely competitive. Whether you're talking about Microsoft or IBM or Google, there's a lot of players that are getting more aggressive in that space. And whereas in 5 years, I still have great confidence that Amazon's going to be the #1 player in e-commerce. Not so sure about the cloud business. A lot of technological change in that space. So
that would be a big deal because AWS is really what some point to as really a supporter for Amazon going forward.
Yeah, it's driving the valuation, it's driving the investment thesis right now, and that's the piece of the puzzle which I'm a little bit less certain about.
So this all brings us to the really big earnings week that we have in tech, and take a look at the Bloomberg here. The revisions we've seen for S&P companies has been enormous, just not when it comes to tech. So this is the ratio of earnings forecasts, tech versus the rest of the S&P, and you can see the tech revisions have just really underperformed. Shira, what did you make of that, and what does that mean is there disappointment that we still need to factor in?
Well, it does feel like there's been a little bit of change in sentiment for some of the big tech names, particularly Apple. So even though you've seen the revenue and profit estimates for Apple start to creep up in the last few months, particularly as these tax cut changes certainly seem to help Apple with some of their overseas cash holdings. At the same time, there's been a little bit of softening sentiment about the iPhone X and whether that's really going to be the sales blockbuster that people expected at this point last year.